Good afternoon. This is Ifan from the Strategic Day Trader, and this is your market wrap for December 4th, 2019. Q is going to be up 0.62 and SPY going to be up 0.74. We got a little bit less than 10 minutes until the close. Market's really been rallying, following through on that gap up. Looks like we're going to be looking for a daily sell setup to see if that is going to follow through. So we talked about how we got first this break of the hourly uptrend that caused by this by the sell-off, and then we got the gap down, and then after the gap down we can look for a bearish entry, bearish pattern. But since then we got the gap up, and then so far today it's just been staying strong. So I did mention yesterday, because of the way that we closed, it didn't look like we were going to get the kind of attempt to move lower yesterday. We can watch for it today, but today we got a gap up in continuation. So we're really going to be watching this daily now, now that the hourly didn't give us that attempt to move lower. So got the gap down, and that's the reason why I didn't say to just be bearish or to short if we break this area, right? We need to get through the support and actually get follow through. It's been so many times now on this uptrend that we've seen selling, and the important thing about not getting caught trying to short the break and then having it rally against you is waiting for the follow through. So we got the break, waiting for the setup, and we just haven't got it quite yet. So we'll see if we get it on the daily. All right, looking like if we can get underneath today's low, that will kind of be the earliest point that we can initiate a kind of our bearish bias, right? We're still waiting for that setup. Bias is bearish, right, which we're expecting rallies to get sold, but so far, right, rally has not been tested yet, just gap up and continuing to stay up here at the highs. Okay, so we'll see if we actually get an attempt to move lower. So, and still going to be looking to anticipate that bearish short-term sell-off. Now, the long-term, as discussed yesterday, still looks higher, still looks bullish. Okay, we're just looking for a short-term, excuse me, a short-term pullback. Okay, so that's what we're going to be looking for based on the hourly and the daily. Okay, so let's talk about the management rule. All right, that we'll see kind of come into play in yesterday's and today's play. Okay, so the first rule here is what we're looking at here, okay, which is when we get wide range volume increases entry bar. So we get in and we are playing long, for instance, and we get a huge green bar to kind of start the move. You see the volume pick up, right? That's when the first decision takes place. Okay, so we can either trail half. If it's a huge bar, you can trail half to the 50% of the bar, or if it's a decent sized bar, but maybe not enough profit yet, quite in that bar alone, to go to the inside bar. Okay, so this is the first rule, the first time I have a chance to make a decision to do something about the trade. Okay, so for instance, if you played the TECK today, right, and say you happen to catch it on this big pop, right, it's not a bad idea to trail half of it to half of this bar. You don't want to give back this whole thing if the next bar becomes an engulfing bar, right? Because what should happen is that bar should get follow through. When you get this ignition, it should get follow through. Otherwise, you're in danger of a breakout failure. Okay, so let's look at the REGI from yesterday, for instance. We played that in the afternoon. The 15-minute chart is our focus in the afternoon here, and we'll look at what we got here. Okay. So if you were in the room, if you played it along with me, you know that after we got this bar, we trailed the whole thing to 1794. Okay, before we got to target 1, we eventually did get to target, right? Target 1 and target 2, but we said as soon as it triggered, the 15-minute bar finished forming and we got an inside bar, trail to the inside bar, because what am I looking for here? The range and the volume both to spike. Okay, so we got this bar, which isn't the biggest bar on the chart, but much bigger than any of the bars prior, and then the volume also spiked. So this is the bar that I want to protect against. If it doesn't follow through after the inside bar, it's probably going to be a breakout failure, because if it is going to work, typically should follow through from there. Okay, so that is decision point number 1. So now let's look at what we got today. So today, call on the VST this morning. All right, played it right near the open there, shortly after the open. Once I found it, another one like the Reggie was an additional gap that I found shortly after the open here, basing, and then we got the breakdown. Okay, so let's zoom in on this bar here. Okay, because this is the kind of thing, right, that if we don't have our rules in place, right, that it can be easy to kind of give yourself a little bit too much leniency in how to manage. So if we saw the Reggie yesterday and you saw that I trailed it after the inside bar, right, you might be thinking, okay, we got the entry here, it broke 25.20, maybe we should trail to this bar, to 25.21. That'll be just keeping it a really small loss, more or less break even, right? And so even from kind of an emotional appeal, that sounds kind of nice. Let's just trail it there. Okay, but what does the rules call for here? Wide range and volume both need to pick up. Now the range on this is really not that big, not that impressive really. So it is a little bit bigger than the bars previous. But I also want to see big volume, and we didn't get the big volume either, right? So that is the distinction, is that this didn't quite give us the wide range and the wide volume. Therefore, this was not trailed to the inside bar, right? So we had to live through this pullback. Now there was a possibility that this would rally, take out our stop, right? But the goal is that I want to stick with the plan, stick with the management, because it's shown to lead to a positive expectancy, and then always be evaluating. Okay, so then eventually, right, as you can see, target 1 was 25. We eventually got to 25 here, and then I said take half, trail 1 minute bar by bar. Okay, and then 1 minute bar by bar trailed right there. Okay, and then as we left the stop up here, I actually did tighten this, right, just a little bit down to 35 after it gave us this retest. So this little bit of a trail is a deviation from plan. I did say to trail to here, right, eventually took it out and would have stopped, right? So, you know, while the goal is to try and stick to the management as closely as possible, I can't say that I've ever had a month that it was 100%. I think the upper range is 80%. The lower range is around 60%. Okay, as much as I do try to stick with the management. Now, the reason for the kind of deviation there is that we got this kind of move up, retested. The top of that bar was 35. Top of that bar was 33. I figured it shouldn't take out 35, right? So that was kind of the thinking on that, right? So for the most part, though, right, we want to have a management, and we want to stick with the management as much as we can and always be evaluating. Now, if something needs to be changed, if, let's say, I notice that whenever my entry bar, let's say my entry bar gets negated, I should just kill it, you know, in a situation like that. Then, right, that's always something that we can take a look back at the trades, see what the difference would have been if we had made that adjustment on previous trades, and decide if we want to implement it. Now, I track whenever I deviate from management and what the cost or the benefit was. Okay, and so as long as the management, the deviations from management all usually end up with me leaving money on the table month after month, that tells me I should try to stick with my management as much as possible. So the net result of this play, we did get some on the front half, and then the back half was a loss. Okay, so the back half did come back up, take out 35. So it was a very kind of small winner, more or less break even, right? And eventually kind of rallied further. Okay, but what I wanted to focus on today was that first management rule. Okay, and to let you know that it's very specific what it is that can give me permission to trail to an inside bar right after I get in. Okay, now it is possible that this could have failed and then went right back up and took out our stop, right? And then I would look at this, and if you're in the room, you know that I've been in those situations before where, okay, yes, we could have trailed to the inside bar, but this wasn't really enough volume or enough range for me to say that we should really protect against a breakdown failure. And sometimes that does happen, right? But for the most part, they should stand out to us when we get that big wide range bar, okay? And the volume should really stand out. So something like the TECK, I think, is a much better example of when you get something like this, right? And you may think that it's not going to happen all that much, but if you do play a lot of breakouts, and especially breakouts on gaps, it's actually going to happen quite often. Enough to where I've seen it where it's, breakout, got an inside bar and then failed, or that it breakout and then kept going, that, okay, this is what should happen if the breakout is going to work. So, it actually does happen quite a bit, especially if you play and you're always scanning for gaps and then high of the day and low of the day bases. It does happen quite a bit. The only thing that we're kind of watching for a short this afternoon, or at least for me, I think there were some other short ideas, was like this ORAN, right? And if you get this breakdown, volume picks up, range picks up, right? Puts in a little bar and you trail over that, right? I guess this, had some potential to maybe follow through some more, but we got to end of the day here. So we're actually you're gonna see these quite a bit, okay? If this is what you're looking for, and this is what I'm looking for, tight bars leading into this base after a large gap down, okay? All right, so that is rule number 1 in my management. That is the first time I have permission to make some kind of change to the trail, to the stop, okay? And that comes up quite a bit if you play a lot of breakdowns on things that are moving, okay? So I just wanted to go over that. Thought it was kind of relevant to yesterday's Reggie and then also to today's VST, okay? All right, hope you did well today. We'll be back at it tomorrow. We'll see if the market wants to give us some kind of semblance of a daily sell setup. We're tracing back into a resistance level. We will see. So far, hourly hasn't wanted to roll over yet, right? So underneath, I think underneath this base is a little bit too aggressive, but it's really not that different. Underneath today's low is where I am saying we can kind of start the bearish bias, see what the follow through is if we are able to get underneath today's low. I think that'll give us some good insight into where we're going, right, for the rest of the month. I did think that this bar here that we got at the beginning of this week, we had to take notice of if it was gonna start some pullback in the market for the month of December. This was going to be the start of it. Didn't say necessarily we should all be bearish or go all out bearish, but wanted to see support break and then give us the next setup, and we are getting potentially the next setup. Okay, so we'll be watching for underneath today's low for initiation of the bearish bias. Okay, all right. So we'll see what the market wants to do, and I will talk to you guys tomorrow. All right, have a good evening.